Hello traders, Gary Wagner here. Just before 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, 21st day of March 2017, and this is the Daily Report for Gold and Silver. Due to a power outage in East Oahu through the morning part of today, we are coming to you rather late, so this will be an extremely shortened edition of the gold forecast, but nonetheless, we have a couple of minutes to put out a small video report on the day, and what a day we have seen with U.S. equities taking a nosedive, Dow Jones Industrial Average trading off well over 200 points, and gold really continuing the rally, which began on Wednesday of last week with the conclusion of the FOMC meeting and the tone and posture of the Fed being perceived as accommodative, the continuation of their current monetary policy. Gold futures, when we look at April, trading at $12.4460, putting it up about $10.60. The low on the day, $12.26, and the high, $12.47. So we're just about $3 off the high on the day. Of course, we did make a recommendation to enter the market from the long side yesterday, and obviously we went in to an outer month. Most active outer month right now is June. We got in about $10 from here at $12.37. Market is currently trading $12.47, low $29.90, and the high on the day $12.50. Of course, the big news really was the Dow Jones Industrial Average. That closing off 237 points, a loss of 1.1% on the day, exceeding that, this being the greatest single day drop since the election was held with Donald Trump becoming president, that of course being in November of last year. When we look at the dollar, and that's the other market we want to pay close attention to, we've got some serious selling in the dollar. Dollar now under more weakness, breaking below 100 at 99.73, putting it off about 6 to 0.7%. That, of course, fueling to this current fire that is the gold rally. Let's take a look at a couple of charts. And as I said, this will be an extremely short edition of the gold forecast. Traders, no doubt, a really interesting day in the market. We've got some major activity with the Dow Jones Industrial, U.S. equities basically taking a nosedive, falling out of bed, and gold continuing this rally, which really began last week on Wednesday, immediately following the conclusion of this month's FOMC meeting. Now, today we're up about $10, and that was due to a weak dollar, geopolitical concerns overseas, as well as the U.S. equities markets coming under fire. Interestingly enough, as I am doing my research for an opening letter, I typically like to come up with some sort of a headline that encapsulates, that really suggests the overall tone for the markets and activity on that day. And today, for some reason, the old Cherelle song popped into my head, which was Mama Told Me There'll Be Days Like This. And that's kind of how I felt as I saw the equities markets under pressure and the metals really beginning to rise. And no sooner did I write the headline, we have a major power outage here in East Oahu. And it really made me realize how much I depend on our studio here as well as the tools that we have, because armed with the laptop, I was able to come up with some sort of a finish to the letter, but I was not able to do the kind of research I typically like to do. Nonetheless, here's what we're looking at. Gold right now continues to rally. Of course, we took a long position. We're in June, which is about a $3 difference between June and this most active April's contract. I really do not see any real resistance until this former top. This top comes in roughly at about $12.65 in April, a couple dollars higher, of course, in the June contract. And so I really believe that now that we have passed above the 28, this being the 61% retracement level, but now that we've gone past these levels, which I felt were the only minor levels of resistance we have, we really don't have any major resistance until about 1250 right in here. We've got a 50% retracement at 1257, and then of course this high up here at 1265. That's really where I think that this market will head over the next week and a half. We are looking at a daily chart of the dollar index. Dollar index down 0.6% plus. But the key, as far as I'm concerned, on a technical basis, is how we have now broken through these channel lines, which really signals some further selling in the dollar. I think that the dollar at this point, now that it is broken below 100, is trading just at 99.76. Could go as low as 99 even. That's about another 0.75%. And I don't really see any major support coming into the dollar till about 98.19, the 23% retracement of the fib retracement that we have been looking at with gold. And traders, just to give you an idea of the severity in terms of the sell-off, 237 points lower on the Dow daily chart. This, of course, representing today's candle. I also have our 50-day moving average, and that's what is watched, so critically important to many traders. That's the first point. I think that if it does continue under pressure, in other words, if they don't patch the leak in whatever boat is sinking that has caused this, and of course a lot of it has to do with the optimism that flushed out of the market because of the stalemate over the Affordable Care Act and the desire to repeal and replace it by this administration, we could easily see further selling in the Dow, further weakness in the dollar, and further rises in gold. In terms of the point, I would look for some kind of support in the Dow. It's really hard to tell, but our first level we would want to see is, if it continues to sell off, how it reacts at 20,400. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.